Well, hello and welcome to Business 360. I'm Ashmit Kumar, and here are the headlines that we're tracking this evening. Stock markets rise for the fourth straight week. Nifty is now 61 points away from record high. Financials lead with gains. Mid-caps outperform. Cognizant's new CEO, Ravi Kumar, says financial services sector has fallen off a cliff. IT majors make structural changes to save costs and plans to move work to Tier 2 cities. Also eyes acquisitions to plug capability and geographic gaps. That's a CNBC-TV18 exclusive. IT major TCS and insurance provider Transamerica mutually call off a $2 billion 10-year contract ahead of the schedule. IT stocks take a hit as it raises concerns about more potential deal cancellations. Shares of HDFC Life rally in trade. CEO Vibha Padalkar expects growth in the mid-teens along with steady margins, says the HDFC merger will boost credit life business. That's another exclusive. Government plans to widen the ambit of Prevention of Money Laundering Act, wants lawyers to report dubious transactions by their clients. Bar Council confirms receiving this proposal. Lawyers worry about potential damage to attorney-client confidentiality. India is all set to get integrated into the global defense supply chain, says India-US Ambassador Taranjeet Sandhu. Also adds that technology will be the focus of discussions with the US as Prime Minister Modi gears up for a state visit starting next week. The Indian government questioned Moodys ratings parameters and approach, asks how countries like Indonesia have a better rating than India. Government sources tell CNBC-TV18 that they are hopeful about a ratings upgrade. Moodys currently has the lowest investment grade rating for India. Government to continue with measures to manage wheat prices and stock even as headroom for market interventions shrink. Defense move to bar states from open market sales, impose stock limits. Manipur continues to remain tense as ethnic clashes continue. Union Minister R.K. Ranjan Singh's house in Imphal set on fire by a mob. Thousands reportedly gathered outside his residence and hurled petrol bombs. Cyclone Biparjoy leaves a trail of destruction across coastal Gujarat. Large parts of Kutch and Saurashtra regions are inundated. About 1,000 villages are without electricity. Red alert in parts of Rajasthan as the cyclone weakens and moves inland. Well, let's start with the day's market action. Sensex and Nifty gained for the fourth straight week, with Nifty closing less than 61 points away from its all-time high. Both Sensex and Nifty ended the day at record closing highs. Financial stocks led with gains and mid-caps also outperformed. Well, on to the commodity space. Oil traded marginally lower on back of optimism around higher demand coming in from China and a weakening dollar. Turkey and Iraq's meet to resume oil exports also weighed in on the prices. Meanwhile, gold witnessed a rebound after hitting a two-month low yesterday. This was due to a fall in the dollar index. Well, on to a CNBC-TV18 exclusive. Cognizant's new CEO, Ravi Kumar, has said that the financial services sector has fallen off a cliff due to an impact on discretionary spending. In a conversation with CNBC-TV18 Shireen Bhan, he revealed that the IT major is making structural changes to save costs and is considering moving to work to Tier 2 cities. Under his leadership, Cognizant is also eyeing acquisitions to plug capabilities and geographic gaps. Take a look.
There's no change in my narrative since what I have said in May. Some sectors are impacted on discretionary spend, and it's also falling off the cliff in some places. Financial services is the sector. Of course, we have a huge presence in healthcare. In fact, our healthcare economy is one of the largest in the world. Between healthcare, health equipment, devices, life sciences, we are the biggest provider. That is resilient to economic cycles. Overall, I'm seeing a lot of large deals. I think this is how the market is evolving, and I'm hoping that the progress we've made so far, as well as what we are planning to do for the future, I'm very hopeful that we could bring back the growth mindset. 50% of my free cash we use for acquisitions. That's the stated policy. I have not changed that policy. I think acquisitions have contributed well to digital capabilities and gaps which we had, and we've always used that as a way to fill the gaps. I'm going to continue to look for meaningful, purposeful acquisitions.
And well, you can catch that entire conversation with Cognizant's new CEO, Ravi Kumar, at 5 p.m. and 9:30 p.m. right here on CNBC-TV18. More in action from the IT space. IT major Tata Consultancy Services and insurance provider Transamerica have mutually called off a $2 billion 10-year contract ahead of schedule. Both companies have cited the current macroeconomic scenario and respective business priorities as reasons for terminating this deal. The news hit other IT stocks as well as the market feared more deal cancellations. Cash-strapped Vodafone Idea has trimmed its retail partner network to cut costs. According to a report by Economic Times, the telco has removed around 25,000 retail partners and has also stopped paying commissions. The report also says that these retailers delivered negative losses for a while now. Shares of HDFC Life rallied in trade today. Comes after the company reported a strong performance in FY23 and expects margins to remain steady this year. Speaking to CNBC-TV18, the company CEO, Vibha Padalkar, said that they expect growth for the current fiscal year to be in the mid-teens. She also added that the company expects a 30% growth in the Credit Life business.
I'll talk about Credit Life first. Credit Life has been growing in the range of between 40% to 80%. We expect growth to be at least 30+%. You will see that for HDFC Life, the retail sum assured growth has been upwards of 50%. So that growth in terms of retail protection is back, and even Credit Life is back. So I would expect this to see it.
Meanwhile, Citigroup would have to cut close to 5,000 jobs by the end of June, according to Financial Times. Remember, the group began cutting jobs across its investment banking as well as trading segments since the start of 2023. At a recent investor conference, the company's chief financial officer, Mark Mason, said that restructuring and repositioning processes will cost an additional expense of $400 million in the second quarter of this year. Top government officials have met the ratings agency Moodys to pitch for an upgrade. Sources tell us that the CA, Anant Nageshwaran, made a presentation to Moodys on the Indian point of view. Sources tell us that the government questioned Moodys' ratings parameters and approach as well. Shivani Bajaj now joins us with more details. Shivani, tell us, what are you picking up?
Well, yes, government sources have told CNBC-TV18 that the government is actually hopeful for a ratings upgrade from Moodys. We have also learned from sources that India has questioned Moodys on their approach and rating parameters. India has asked some pertinent questions like how can countries like Indonesia have a better rating than India? CAV Anant Nageshwaran presented India's point of view to Moodys today, and sources suggest that discussions with Moodys were actually favorable. According to sources, state budget, divestment and state borrowing were the key discussion points in the meeting. Sources also suggest that Moodys has acknowledged the positives of the Indian economy. Remember that the Finance Ministry held similar meetings with Fitch and S&P, other two global credit rating agencies earlier this year, to push for an upgrade in India's sovereign ratings. Back to you.
Right, now, after imposing stock limits on wheat for the first time in 15 years, the government also decided to exclude states from the open market sales until the end of December. Sapna Das now joins us. Sapna, tell us, what's the government's rationale in resorting to such moves?
It's probably a demand-supply mismatch where the market has been able to read into it. So if you look at the current wheat stock position versus the buffer norm requirement, so 309 LMT worth of wheat stocks against a buffer norm of around 276 LMT for July. You have a headroom of around 33 LMT, out of which some portion is also going to be utilized for the open market sales. So as far as the official data is concerned, this appears to be a pretty neck-to-neck situation. Second, of course, in terms of procurement of wheat has been lower this time as against the estimates given by states. So the estimates given by states were around 341 LMT worth of wheat procurement, but that has been around 262 LMT. So that is also another reason which has probably put pressure pressure on pricing. Last but not the least, in the last couple of years, the government has also done massive sales under the Pradhan Mantri Garib Kalyan Yojana. So historically, there was a pressure on wheat stocks for quite some time. We just spoke about procurement by states, basically, or rather estimates given by them. So many of the states have really not come forward because the prices have been very high. Farmers have chosen to give their wheat stocks to private traders. For example, UP and Rajasthan. There has been very minimal wheat procurement by them, not just in this Rabi season, but in the earlier season as well. And now the procurement season is over. From here onwards, the stocks are going to start depleting. So keeping all of this in mind, the government has taken these few important decisions like stock limits and excluding states from the open market sales, because in any case, states have also not been procuring, during the procurement season. And this is going to be a bit of a challenge if your stock position continues to be like this. So these kind of firefighting measures as far as stocks and pricing for wheat is concerned are likely to continue for some time.
Right, Sapna, thanks a lot for that. In some national news now, Manipur continues to remain tense as ethnic clashes continue. Union Minister R.K. Ranjan Singh's house in Imphal was set on fire by a mob last night. It is claimed that thousands gathered outside his residence and hurled petrol bombs. Cyclone Biparjoy left a trail of destruction across coastal Gujarat after its landfall last evening. Around 1,100 villages and dozens of towns lost power as the cyclone uprooted electricity poles. The Met Department has said that the intensity of the cyclone has reduced to severe. It has also issued a red alert in parts of Rajasthan as the cyclone moved inland. Prime Minister Narendra Modi is set to visit the United States next week. India's US Ambassador Taranjeet Sandhu believes that India is being integrated into the defense manufacturing supply chain. Both nations are set to ink a deal to enable General Electric and Hindustan Aeronautics to make fighter jet engines in India. There's another drone deal in the works.
Affordable vaccines, affordable medicines is an important priority both in the United States and in India. Similarly, digital technology, and in technology, we have the startups, we have the innovation, which is very, very significant for India's young population. Third area I will touch is energy, clean energy, renewables, green hydrogen, battery technology, etc., etc. In each of these, I can elaborate. Again, this is focused towards the development of the people, and it helps both the countries. We are looking at what I will say is a much beyond a buyer-seller relationship. Actually, we are being integrated into the global defense supply chain, and the leverage of India's comparative advantages and that opportunity in defense industrial collaboration, especially here in innovation, co-development and co-production. India is an emerging powerhouse in technology. Obviously, defense will be one of the areas which will be touched upon.
Well, you can catch the entire conversation of the Indian ambassador to the United States tonight at 7:30 p.m. on Global Eye. Well, time now for a short break, but coming up, Union government has decided to move to widen the ambit of money laundering laws in the country and plans to make lawyers report dubious financial transactions by their clients. We decode the possible impact of this move when we come back. Welcome back. You're watching Business 360. Now, the government has moved to widen the ambit of the money laundering laws in the country. The centre plans to make lawyers report dubious financial transactions by their clients. However, lawyers have expressed their concern, saying that this move could damage attorney-client confidentiality. Now, sources within the Bar Council have told CNBC-TV18 that they have received a letter from the government proposing this change. The Bar Council is likely to make a decision after considering the Executive Committee submissions as well as various state bar councils. Now, to take this discussion ahead, I'm now joined by Mr. Dinesh Kanabar, CEO at Dhruva Advisors, and senior lawyer Rohan Shah. Gentlemen, thank you so much for joining us. Mr. Shah, let me come to you. Let me get a lawyer's perspective on this. Lawyers being brought under the scope of PMLA. This is not the first time we've heard it, but this is the first time that we do see some action on the ground. Your quick take on that.
I think, just around May, we saw chartered accountants being brought within the fold of the law. And I think this was expected because if you see the recommendations of the FATF, they had clearly identified, amongst others, lawyers also to be included. So from that perspective, I don't think it's surprising. I think it's also important to put this in perspective because when we look at other major jurisdictions, and specifically UK, Singapore, New Zealand, and the EU, they already have some level of both KYC and record keeping, which is obligatory in the context of lawyers. So I think, as this now sort of comes to include lawyers, important to sort of understand two things. Under the FATF recommendation 22 is in terms of the customer diligence and also includes the maintenance of records. I think what is of concern is recommendation 23, which imposes a reporting requirement. And this effectively says that if you see a suspicious transaction, you ought to report it. What I think people are missing is that the interpretative note to the same recommendation actually preserves the aspect of legal privilege, because that interpretative note itself says that if a lawyer comes to know of a set of facts or transaction which is protected by legal privilege, then he will continue to have privilege. So I think it's important to sort of fully understand the direction in which this is going. But if the concerns are about reporting, then the FATF itself seems to make some provision to retain the privilege.
Sure. Mr. Kanabar, let me get you in on the same issue here. As Mr. Shah was pointing out, that we saw in the month of May that even chartered accountants as well as CSs were brought under the scope. And all of this is being looked at in the lens of India undergoing an assessment in the month of November by the FATF. Is this the natural course of action that one should accept as perhaps the way forward? Or is there some scope of dialogue here in terms of whether or not lawyers, chartered accountants should be brought under the PMLA?
Well, first, insofar as chartered accountants are concerned, the notifications are already out. And there are two sets of notification. The first notification speaks about what are the designated business or profession which should be covered. And as Rohan mentioned earlier, the profession of accountancy, CS, ICWA have been brought within the ambit. And then second is which are the nature of transactions which are required to be reported. Rohan mentioned about how the global network itself really protects the client privilege. But it's also important to note that the notifications which have come out bring out really two separate aspects. One is chartered accountants in practice. What are the things that they're supposed to do? So, for example, if a chartered accountant in practice is transacting on immovable property or is operating the client's account or selling or buying securities on behalf of a client, it is obvious that he is doing something which a client ought to do. And therefore, such activities are bound to come within the reporting requirements. You cannot claim that you are acting on behalf of the client, and then if there is something suspicious, you still do not report about it, because your reporting requirements have to be contemporaneous or coterminous with the reporting requirements of the person on whose behalf you are reporting. Second is a notification which came out on 9th of May, which is a little bit ambiguous, which speaks about business, and which speaks about the business of formation of companies, maintenance, etc. So to answer your question, when it goes to the lawyers, it will be interesting to see what is it that comes out in the notification, how are lawyers required to report, what are they required to be reporting on, and what are the exclusions from that requirement. If the exclusions are consistent with what are the global recommendations, then probably there is nothing really to worry about, because then all that you're doing is to say that if you are doing acts on behalf of a client, then you are bound to do the KYC for the client. And if you find something suspicious, you are bound to report on it. So I think a lot will depend on the exact wordings of the notification, what are the transactions covered, and what is the reporting requirement.
Interesting. Let me take that across to Mr. Shah. Mr. Shah, I'll ask for your indulgence on this particular point that Mr. Kanabar raised with respect to what the wording may actually look like. What would be the areas of concerns from a lawyer's standpoint if it were to be included? You mentioned reporting as one concern, reporting of suspicious transaction as being one concern. What are these concerns that, if put on paper, could raise an issue here for the larger legal community?
I think just as Mr. Kanavar said, when you look at the reporting requirement, there are 5 categories of issues in relation to which you report. Now, it includes real estate transactions, it includes the formation of companies, it includes, in certain parts of the language, even day-to-day activities in terms of structure, organization, the investments into companies. So the width of that sort of seems A, nebulous, and B, it seems extremely wide. Because, if you think, let's say, essentially of a lawyer whose practice is in the real estate, it would then seem that, almost everything that they do needs to be subject matter of the maintenance of records. Likewise, somebody who is sort of entrenched in company formation, somebody who is entrenched in offering advice in terms of the conduct of the affairs of a company, again, it would sort of seem that, record keeping from their perspective would be quite wide. So I think it's important to sort of understand, what the true ambit of this is going to be. And if you see, I think there's a good guidance available in terms of the EU directive. Because what the EU directive sort of focuses on is to say that everything can, in a manner, be protected by privilege, other than if you are directly participating in an activity which would be a money laundering activity, or if as a lawyer you're directly participating in a transaction which is a terror funding transaction. So that, in any case, I think A, is morally not condonable, and even under Section 126 of our Evidence Act, the entire concept of privilege has 2 exceptions. And those exceptions include a situation where a lawyer directly is in the know and a lawyer directly is dealing with something which is then liable to be regarded as criminal. So I think if we sort of focus on the factor that some things are just not permissible, and I don't think there is any yardstick of being able to condone those. So if somebody were actively advising on a transaction of money laundering or terror funding, I see no reason whatsoever why there should be any sort of privilege in the context of somebody who has that. But once we say that this is what to be focused, then I think we can be a little more realistic in terms of where else we want reporting, where else we want record keeping, and how we make that more practical, and how we sort of ensure that legitimate businesses and legitimate activities can clearly coexist with the obligation to aid in what is, I think, now both a national and international cause, namely ensuring that nobody is really participating in money laundering or terror funding.
Right. Mr. Shah, Mr. Kanabar, let me come to you for the final word on this. Mr. Shah was referring to, of course, Section 126 of the Evidence Act. It very clearly says that in cases where there's a client pursuing a property, possession of a property through a forged deed, that communication may not be covered under privilege. The question I want to then ask you is that these professions, when you look at accountancy, when you look at legal professions based on trust, based on the edifice of trust, in such a scenario, when they're already regulated under separate statute, by various individual dedicated regulators. Will this perhaps add to more the compliance burden? Will this make things more complicated in situations, as the example as Mr. Shah gave, a lawyer pursuing the focus of pursuing real estate transactions could find difficulties and challenges?
I totally agree with you, Ashmit. And I was just reading an article, particularly as it concerns the audit profession, on how audit has become such an onerous thing. So first, you are required to be a watchdog. And again, there is this whole issue regarding watchdog versus bloodhound and all of that. But leaving that aside, you are required to really look at transactions. You are guilty of disciplinary proceedings in the Chartered Accountants Act. We now have NAFRA and everything to be governed by that. And now, in addition, we have this reporting requirements. I think, Ashmit, I could actually break up the entire discussion if one has to focus on two parts. Insofar as the requirement is that you are doing activities on behalf of a client, and what a client cannot do, you cannot do for and on behalf of the client. And therefore, as Rohan mentioned, whether it is money laundering, whether it is terror funding or whatever else, if a client can't do, you can't do, absolutely given, I don't think there can be any two arguments. The question is that the notification, as I read for the chartered accountants, and I presume that it is something similar which will come for lawyers, is in some instances pretty vague and pretty so widespread. So as Rohan was mentioning, for example, if you are involved in the process of company formation, if you have been the initial director of the company, etc., you are sort of almost regarded as the person who's carrying on that business for the client, which may actually be only a service and nothing else. And for you to be regulated on that basis, for the reporting requirements to come in a situation like that may not be appropriate. So it's not really what is the important thing is the law, but the way, as I said earlier also, the way the notifications are worded, and if that ambit is very, very broad, then we are going to see practical difficulties in implementation, etc., not otherwise.
Right. Right, Mr. Kanamba, thank you so much for sharing your time. Mr. Rohan Shah, thank you so much for sharing your time and perspective on this one issue that is under discussion as we speak. And hopefully we'll begin to get more clarity once the Bar Council firms up a view and presents it to the government. But that's all the time that we have for. It's a wrap on this edition of Business 360. Thanks so much for watching. Our Friday Special Editors Roundtable is up next. Stay tuned.